Welcome to Remaking the Economy, Escaping Corporate Capture. I'm Steve Dubb, Senior Editor of Economic Justice here at Nonprofit Quarterly, coming to you from Boston on land historically stewarded by the Massachusetts Nation. For this webinar, we're looking at the question of what is corporate capture and how can movement groups not only confront the growing concentration of corporate economic power, but organize to escape it and build economies of liberation. That was the organizing question for the summer 2024 issue of Nonprofit Quarterly. Today, we have authors of 4 of the articles in that issue who will expand upon their contributions and address this and many related questions. Our expert panelists are Kali Akuno is the co-founder and executive director of Cooperation Jackson, based in Jackson, Mississippi. Hannah Appel is co-founder of the Debt Collective, a professor of anthropology and associate director of the UCLA Luskin Institute on Inequality and Democracy in Los Angeles, California. Arlene Martinez is deputy executive director of Good Jobs First, based in Washington, D.C. And Sarah Michaelbust is research director for Bargaining for the Common Good and is based at Georgetown University's Kalmanowitz Initiative for Labor and the Working Poor in Washington, D.C. Before we get started, a few notes. First, we're very excited to take your questions. We'll start with a few questions of our own and then get to yours. Please enter your questions into the questions box at the bottom of your screen, and I'll get to as many of them as I can. Generally, we reserve the last 30 minutes of the webinar for your questions. Please also feel encouraged to participate in the chat. I see many of you are already doing so. And to join the conversation, you can online via social media with our hashtag Rebuild the Economy. One last request, at the end of this webinar, there'll be a brief survey. It's only 5 questions. It's really helpful if you fill that out, and it informs our future work. And with that, let's get started. And I'll start with Sarah, and if you could introduce yourself and talk about the article that you co-authored on pensions and worker control of pensions, and a little bit about bargaining for the common good.
All right, y'all. Thank you to Steve and Nonprofit Quarterly for inviting us to be a part of this and to inviting us to write the article as well. So bargaining for the common good, myself, Sarah Michaelbust, she, her pronouns. I'm the research director, as Steve said, at Bargaining for the Common Good. And bargaining for the common good is really about building long-term alignments between local unions and community groups, especially folks that have memberships, to take on corporate power for systemic change, right? And there's no better opportunity, I would say, to do that at scale than looking at what's happening with pensions in this country. There's about $6 trillion for just municipal and state public workers in the US in their pensions and deferred compensation, right? And if you can believe it, that's actually underfunded from what the about 15 million workers need and have been promised for their retirement. What does that mean? It puts the pension boards in a position where they feel like we've got to make more money. And it's estimated that 65% of the money in pension funds needs to be made off of the investments because they just didn't put enough in to begin with. And a big reason for that is because wealthy folks and corporations are not paying enough taxes for us to have the revenue to do it, among many, many other things that we all are fighting for, right? And what happens then is the pension boards say, what do we do? And of course, those same wealthy corporations and individuals say, we have the solution, right? We're asset managers, we're investment managers, and we can help you get really high returns and get as much money as possible through your investments. 3 huge problems with that. 1, they charge really high fees, right? That they get no matter what, right? So they're going to make, in addition to all the billions they've already made, much more money. 2, we don't know, and there's really no accountability to whether or not that they're actually going to deliver on those returns that they're promising, and there's a lot of evidence that they can't actually And three, and probably most importantly, they're investing in really, really terrible things that are bad for union members, for workers, for our communities, for our families, right? That includes landlords that are rent gouging, evicting, that don't maintain their properties. It's weapons manufacturers. It's folks that are polluting fossil fuels. It's on the healthcare side, companies that are cutting jobs, that are not providing basic services, that are closing hospitals around the country, right? All this terrible, terrible stuff. So what are we doing about that as a movement over the last several decades? It's not a new thing. People have known about this, or a lot of folks have, and probably many of you on this call, that this is happening for a long time. And where most of the effort has been focused is in national unions, federations, and national organizations, particularly on the climate justice side. They're engaging with those pension boards and trustees to try to get them to change through enacting policies or principles or divesting from particular companies. And, the huge change that we need in how our pension system operates to be able to get money to invest in things that we actually need instead of undermining workers as well as our communities just isn't happening from that approach. And what we talk about in the article is how to change that, how to go in deep with union members, which is what common good work does in general, but in particular with pensions, talk to them about how their money is being invested and what change could look like, right? Not just pulling it out of one company, putting in another bad one, but putting into things that can benefit them, their families, and their communities, and that they have the right. It's their money to demand that that happens, right? And not just ask for it or be kind about it, but to be there and say, what you're doing and how you're defining it. And the you as wealthy folks and corporations, again, unfortunately, they've said, right, what is the bottom line is making these high returns that they can't even deliver or promise is the most important thing, when in reality, union members and folks in our communities know that that's not the case.
Great. Thanks, Sarah. Hannah, if you could introduce yourself and talk about your article on debtor organizing and the work of the Debt Collective a little bit.
Yeah, I'm happy to. And as Sarah said, I want to thank you, Steve, and Nonprofit Quarterly for inviting us. And before I introduce myself, I just want to say, even just listening to you, Sarah, we already hear how all of the issues that we're going to talk about today are so intimately connected, right? You're talking about pension funds. We're all nodding. You're talking about taxes. Obviously, we're going to hear so much about that from Arlene. So it's a really exciting conversation to be a part of, and I'm looking forward to it. So I'm Hannah. As Steve said, I use she, her pronouns. I am based in Los Angeles. I'm one of the many co-founders of the Debt Collective. I still organize with the Debt Collective. And I'm also a professor at UCLA, and I'm going to speak from both of those hats a little bit today, though mostly from the Debt Collective. So the Debt Collective, as some of you may know, is the nation's first debtors union. And we are organizing to build power with debt as leverage, right? So just like in a bargaining for the common good model, workers can use their labor power as leverage to make demands in a strike, right? We are offering the provocation that debtors can also use our power to pay back or not collectively, not only as leverage to get better debt contracts, right? So to get a fairer interest rate, to get rid of racist lending schemes, right? There are all kinds of contractual terms we could change collectively in a debtors union. But what we also see is that we can use the potential power, the potential leverage of debtors unions to change how things are financed in the first place, right? So Sarah dropped, I forget, I think it was like a $6 trillion figure, which is a wildly large figure that pensions control. Student debt alone today is nearly at $2 trillion. $2 trillion, right? That's second only to mortgage debt in terms of household debt. Medical debt also soaring, carceral debt also soaring. And so the provocation of a debtors union, and we talk about this in the article that we wrote about FAQ across our work, that we wrote for NPQ, excuse me, about our work in student debt, our work in medical debt, and our work in housing debt. The provocation of a debtors union is really that debtors can come together in a union formation and use our power collectively, not only to demand debt abolition, but also to demand the reparative public provision of education, of healthcare, and of housing, right? So who better than student debtors to wrest control over the education system back from the corporate capture that we're going to talk quite a bit about? Who better than medical debtors? And I say that not to say that debtors have a uniquely powerful position. It is to say debtors have material power alongside the material power of workers and alongside the material power of tenants, right? All of us can withhold something that those now kind of capitalist systems need, right? They need our work, they need our repayment, they need our mortgage payments, they need obviously our rent payments. So if we're trying to think about building wall-to-wall countervailing power, not only against these systems, but to establish the kind of systems we need that analysis of where our potential material leverage lies. And we are arguing that there's a lot of potential material leverage in debtors alongside workers, alongside tenants, and alongside pension funds, for example, which is also workers, as Sarah explained. So in our article for Nonprofit Quarterly, we're best known for our student debt work. We've actually won, gosh, I think it's now approaching like $180 billion in student debt cancellation. So one thing that's extraordinary and we can mark as a win is, the graph of student debt has ticked up and up and up and up and up, and it's just starting to tick down, which is extraordinary, and that feels like a win. And some of our more nascent or the work that we're just beginning in medical debt and in housing debt. So I'm really happy to be here on this panel today and to talk more with all the panelists and all of you about that work, and I'll leave it there.
Thanks, Hannah. Arlene, if you could introduce yourself and briefly, introduce the article you authored and talk a little bit about Good Jobs First.
Yeah, hi, Arlene Martinez with Good Jobs First. We're a corporate and government watchdog that focuses especially on economic development and the use of incentives or subsidies, as we typically call them. Thanks again for having me on this panel. If you haven't looked through the issue on escaping corporate capture, I recommend you do so. I read all the articles yesterday again, and it is just a wonderful array of all the ways that corporations have really captured our day-to-day lives, and that includes economic development. Again, we do work around incentives, and when you think about what incentives were historically meant to do, they were meant to drive investment to places that wouldn't have otherwise gotten it, places that were historically disenfranchised, communities that needed it a little bit. Maybe if a company got a little bit of money, they might do something that they wouldn't have otherwise done. But if it was ever like that, it certainly isn't now. And what passes for economic development now is really just big companies getting money to do what they would have done anyway. And all that turns out to is to be a total transfer of wealth from a community to a company. And often those companies are huge. We did a study that looked at 90% of the subsidy dollars go to large companies. So small businesses are really miss out, and they're being forced to compete against these big subsidized businesses. It exacerbates racial inequality. We looked at the biggest deals in subsidy history, and 84 or 85% of them are companies that are led by white men, with a lot of shareholders who are also white. So there's all kinds of it's a system that's really rigged against transparency. A lot of times the public has no idea which company is getting money until the deal has been completed. And when these deals are done, not only are small businesses harmed, but the money has to be made up from somewhere. That's it. So that's either other people in the community that make up that money, residents, other small businesses, or services are getting cut. And all that's happening is we're offsetting the costs of companies, again, to do what they would have done anyway. So it doesn't change company behavior. And that's probably the biggest dirty secret in economic development. These companies know where they're going. When they come to a community and start asking for money, they've already decided that that community is where they can locate from a business point of view. It means it's got the workforce that they want. It has the natural resources they need. And a lot of times it's because those communities have the assets that their workers want to be around. So one of the things that we really work on is trying to get communities to think about making their places attractive to live in for the residents who are already there and who may move in. And that means really great public schools, parks, all the things that really draw a company to a community. Those are the things that communities should be investing in, and not these total what are essentially just wastes of money for communities, because it doesn't change company behavior. And in the case of a company like Amazon, communities are subsidizing minimum wage jobs. So I'm looking forward to this conversation and talking about ways to do things differently.
Thanks so much, Arlene. Kali, if you could introduce yourself and talk briefly about your article, Cooperation Jackson, and sort of the vision for the solidarity economy you laid out.
Mm-hmm. Well, greetings to everybody. It's a pleasure to be here. Thanks everybody for tuning in and listening. And I hope you share this broadly as well as the latest issue. I'm Kali Akuno, he, him, or anything said with love and respect. As I mentioned earlier, I'm the director of Cooperation Jackson, based in Eversville, also known as Jackson, Mississippi. And my little contribution grows from our experience over the last decade. This is our 10th year. So we're still a young organization, experimenting, with all the tools and techniques of the solidarity economy to try to radically transform the terms and conditions of how we live our lives and reproduce our community. Through democratic processes. And so the article that I contributed was really trying to highlight, what are both the kind of conditions and the challenge that we have confronted over this period, in the Deep South, some of the opportunities that present themselves over the time period and into the future. And then it really tried to make an argument for a framework that we've been trying to build upon and really share, that we call the build and fight formula. And so a lot of it was really concentrated on that. And in short, what that is an argument for is fundamentally a strategy, which calls for taking a lot of what already currently exists that people are doing autonomously in their communities, from doing mutual aid projects, on significant scales, to food security, food sovereignty work, to various types of labor organizing, either within like cooperatives or union organizing or worker centers, creative means of doing production, be it in maker spaces or fab labs or tool lending libraries, and putting that together in a coordinated way so that we can do more autonomous production that then lends more powers to our community to be able to, quite frankly, negotiate a different set of rules and norms within the overall economy. And I'll end by just, trying to give a little bit of a definition, because there are many, but one that we try to use is, what the solidarity economy overall, and what we're arguing for in this piece, is that what we're really trying to do is socialize production and democratize society, do this through democratic means for the benefit primarily of the common social good, regardless of one's race, class, gender, sexual orientation, nationality, religion, etc., or ability, and to do so in a way that helps us not only build an economy that can meet everybody's needs, but to do so within ecological and bio in a way that regenerates the ecology and the biodiversity that we need to sustain life, as we cannot ignore climate change and the serious ways in which it's already impacting not only our individual states, cities, but also the globe. And we think we have a concrete contribution to making that in the here and now. It just requires a little bit more democratic coordination amongst our forces. So that is what our article is fundamentally trying to get at. I encourage folks to check it out and let us know what you think.
Thanks, Kali. And I guess, I could say this for all of you, but like nobody's taking on a small question in these articles. So And I want to begin with the big question of the issue of the magazine. So, uh, what do we mean by corporate capture? Or what is your take on corporate capture? However you want to think of that. And how does corporate capture of the economy as it exists right now affect economic justice work? And whoever wants to jump in first,
Can I cite an example? Because
yes.
and you have to forgive me. This is born from an experience on the little travels I'm doing now. And I want to cite the example of Airbnb and why, just to give an example. In the early 2000s, as there were a number of like open source shops and resources that communities were doing, like Craigslist and things of that nature, where people were exchanging directly with each other through this kind of new technology. One of the things that was often on offer, and I used it myself, where folks were offering rooms or couches that you could go and stay in, right? Often without paying a fee and just, help us with dinner or, do some social activities with us. So it was about the technology was being employed to reinforce communal bonds and create new relationships in community at its best. And someone then came along, some corporate entities came along, some investors came along and said, ha, we can commodify that, right? Take a social experiment of engaging in solidarity, to go back to that term, and monetize it and then enclose it and capture it in a way that then distorts profoundly local economies to where you now have communities like I was just in Marshfield with a sister organization, Cooperation Vermont, and we were dealing with some of this question where you have in Vermont since the pandemic an epidemic of homelessness, which is often, it's not necessarily homelessness where people are out in the streets, but now having to live 3 and 4 families in one small, 2 or 3 bedroom house. And one of the major factors which is driving this are folks primarily from like New York and Boston, but more importantly, massive real estate corporations that are coming in and investors that are just coming in, buying up properties, renting up, and turning it into Airbnbs. And so it's causing the price to go up of just housing and making it unaffordable for the working class people who live there to be able to stay or sustain themselves. And it's just driving more and more people out in a way. But what I'm trying to get at is a process by which, people come up with innovative ideas to share, right? Often in a non-monetized way to meet social needs. And then corporations come along and then try to not only commodify, but enshrine in law practices which then distort all of our lives through market mechanisms. So that's one particular way that I would kind of describe it to put it in real terms. There's plenty other examples, but I wanted to bring that one up, because it just, I think it highlights how Airbnb as a corporation came in and has now totally distorted, markets, not only in the United States, but around the globe.
Well, I was just going to say, building off of that and talking about what's happened with pensions, right? For me, pensions is workers won the right to have money put aside for their retirement, right? They fought really hard for that. They created a system for doing that. And then corporations said, aha, I don't know if folks have heard OPM that they talk about, other people's money, right? It's literally, we can take workers' money and we can take advantage of it and use it for our own means. And they've done that. But not only have they done that, and they didn't fund it as I was talking about, but now they have defined legally the system in which how those investments are being evaluated, right? So we can't even go in there and say we'd rather invest in other things that are going to benefit workers because they have defined it as saying what benefits workers is getting the highest return possible. And we're just going to lie and say that we can do that. So they've taken a system that workers, fought really hard for, and that has a ton of money that could really be benefiting all of us. And in every way possible, they're using the money and then they're defining it so that they're going to continually be able to do that. And they've convinced us, not just the folks that are on the boards, unfortunately, a lot of the pension fund trustees and others, but members themselves when they show up, or if they do, right? It's like, oh, I have to get more money, right? And then we have to go with this, and it's our only choice. And they've created that entire system and that entire situation and made it so difficult for people to fight back against it, right? And to me, it's just a different example of exactly what you're talking about, Colleen. It's like on the scale of so much money, right? And that same money oftentimes goes into things like Airbnb and then it's just a cycle of continuing this and making it more and more and building that foundation for them to get more power.
Great. Hannah or Arlene, is there a view on it? Hannah, okay.
I can jump in. I think it's really interesting that both Kali and Sarah didn't give like an abstract definition of corporate capture, but gave definitions from their experiences. And I'm going to do the same thing. I think like Kali said earlier about the solidarity economy, we can give a kind of generic definition of corporate capture, but because all of us work in economic justice, we confront it in our organizing every day. So I'm also going to speak to that from the debt collective perspective. And also the first example I'm going to give dovetails with the fact that I teach at what I will call a formerly public university, right? So the University of California system touts itself as the largest and most prestigious public education system in the world. It is no longer a public education system because, I will argue, of corporate capture, even though it still calls itself public. And this isn't unique to the UC system. This is true of any nominally public system across this country. I will just speak from my position at the UC system. So I'm going to talk about corporate capture in our work at the Debt Collective in two areas. One, around student debt and how we fund higher education and actually all public education in this country. And two, around housing. And I'm going to link them through pension funds. So the first example, so right now in the UC system, but again, University of California, but true in any nominally public system, the UC system was called public in the past because it used to be funded by tax dollars. So this, of course, goes to Arlene's work too, right? But there was a tax revolt. There was a lot of organizing by wealthy people and corporations in the kind of late 70s throughout the 80s. Right now, folks refer to it as the kind of neoliberal tax revolt. And that withdrew a ton of taxes from all public services, except, note, incarceration. We'll get to that. But it withdrew a ton of tax dollars from public schools. And so very slowly over time, any nominally public system in higher education has gone from primarily tax funded, majority tax funded, to majority tuition funded. But are students actually paying tuition? No, they're going into debt, right? Except the wealthy kids at these public schools, because now tuition is high. We can talk about that future too. Except the wealthy kids, they and their families are going into debt. That's not even the corporate capture part, even though it was part of a corporate tax revolt that caused that. Here's the corporate capture part I want to talk about. True of K through 12 education, public K through 12 education, and higher ed. Because of this tax fall in a shortfall in tax revenue, right? They're getting all of this tuition money through debt. They're getting paid by the federal government. But what do the universities do? They go to bond markets to raise money, right? So the University of California system has billions of dollars in outstanding debt. So the rich people, or in the corporations, instead of redistributing their money in taxes, now they're actually able to profit off of their investments in the UC system, right? So what used to be redistribution from the few to the many via taxes, now that it's UC funds everything from their dorms to their research and development, right, through bond money. Now it's actually wealthy investors and notably pension funds, right, who are funding them. And so what does that mean? That means that the UC system has to please Moody's and it has to please Standard & Poor's, right? So these are the people who rate bonds. So if you go read Moody's higher education rating system, what does it tell the University of California and all other public schools? You have to always be able to raise tuition so you can guarantee to us that you can repay these bonds. You also have to minimize your unionized labor. So we know that you can have precarious professors who can be fired at any time, right? You also have to continue to maximize whatever revenue generating potential you have. Is that your sports teams? Is that developing real estate? Is that getting like not only raising tuition, but also having fancy dorm options and stuff like that, right? So while the University of California system and all the other nominally public systems can continue to call themselves public, they're completely captured by the for-profit logic that is driven by the bond market and institutionally, specifically driven by Moody's and Standard and Poor's, right? Because if your students go on strike, if your workers go on strike, if there is unrest, right? What happens? Your cost to borrow goes up, right? So they are incentivized to have as few unionized workers as they can. They're constantly incentivized to have as many high-paying students as they possibly can. So getting students who pay more from out of state, getting students who pay more international students. So that's one example of corporate capture in higher education that is driving the student debt crisis for sure. The related example, so the UC system's pension funds just bailed out Blackstone, right? Blackstone is a huge corporation invested in many things, among them real estate, and they bailed out what's called a REIT, Blackstone's Real Estate Investment Trust. Kali was talking about Airbnb. It's the same thing. The University of California laments the housing crisis, that none of their students and none of their workers can afford to live around any of the campuses across all 10 campuses in California. And yet they literally invest in driving up the cost of housing, right? And so we know, and I'll end here, the corporate capture of the housing market, Airbnb is certainly a part of it, but corporate landlords are a huge part of it, right? So we need to build the counterpower, which is obviously what all of us on here are doing, to take those resources, education, housing are the two examples I just gave, out of the hands of those corporations. And I will play my hand. I believe we can. I believe we have the potential power to do it.
Great.
Yeah, thanks for all those examples. I'll just note that a lot of the companies that were mentioned here by my fellow panelists are often heavily subsidized too. So we pay for them to do this really destructive behavior. I'll give a couple other quick examples since my panelists have done such a good job at that. Though I think the idea that of one deal involving an economic development incentive is the case of Panasonic in Kansas. So Panasonic came in, but nobody knew it was that company. And for months, there was speculation about which company it was that was in line to get these massive public subsidies. When a company comes into a community, usually they're getting subsidies from all kinds of different areas. They're getting local subsidies, county subsidies, state subsidies, multiple state level subsidies, and also they'll get these water and power discounts often too. And they force elected officials to sign these non-disclosure agreements. So until the Panasonic deal was completely finalized, the public didn't even know the name of the company and they didn't know how much money Panasonic was getting. And then once a reporter got their hands on the contract, they could see there was no jobs requirements as part of this deal. So you had this massive $1 billion plus deal for one site, one facility, and there were no guaranteed jobs, no guaranteed wages. And that's just one example that happens every day in economic development because companies hold all the cards. They come into a community and they say, we need this money to make this project work, but they don't open up their books, even to the elected officials who will be making these deals. Certainly the public has no way of seeing any of that information. So there's this giant power imbalance that happens in economic development. We saw also too with the Amazon headquarters, the second headquarters that wannabe public auction that Amazon hosted. What ended up was hundreds of communities pitched for this facility when Amazon knew from the very start it was only going to go to a handful of communities. But then they got all this great market information from these other 200 communities. But they go into Virginia, where they ended up going. And a lot of the people who worked in Virginia, who were elected officials, ended up then working for Amazon after this deal had gone through. So when we think about corporate capture and economic development, it's just everything about it from start to finish. I mean, corporations completely control the process. They have all the information, they have all the cards, and they do as much as they can to make sure that um, that's all kept private. And it leads to things like communities that are in Virginia, where Amazon went, the housing costs spiked right away because then you had landlords come in and then they started prying up all the property. And again, to talk about this transfer of wealth, a lot of schools are really hurt by these deals. In Philadelphia, a lot of really wealthy developers and landlords are getting the money, are getting these subsidies to build luxury units while their schools are starved and students can't even go to school on the hottest days because they don't have air conditioning and there's crumbling classrooms and stairwells. Um, those are just some of the ways that corporate capture works in this area.
Great, thanks. So I guess there actually is something that's, corporate capture. So we're on to something here. Um, I'm going to move into possible lines of resistance. You could call them solutions, I suppose, but one, is what Sarah's team wrote about in terms of pensions. And I was looking at the article. It's like $6 trillion in public pension money. Um, Most of which is locked up in rules that have led to um, probably not where the pensioners would want their money to go. So, how are you? What are the opportunities to actually leverage those? I mean, it's 6 trillion public, and then more in private pensions, right? To advance an economy that prioritizes the common good as opposed to some of the um, private equity type things that we were talking about just now. So I'll start with you, Sarah, and others can jump in.
Yeah, I mean, not like unlike a lot of other problems that we encounter as a movement, to me, this is an organizing problem, right? It starts with making sure that the folks that are at the center of it know what's going on, right? And workers, be they union members or not, are by and large really uninformed about the fact that, money is coming out of their check essentially, as well as being contributed by their employer on their behalf to a pension fund, what that looks like, where it's going, the system that then makes a decision about how that's invested, right? Oftentimes that money is their individual pension funds, and those funds are pooled together at the state level, right? Or at a city or county level, depending on the situation. And then there's a board that decides how that money is invested. They don't know almost any of that, 95 to 98% of it, right? Then, after talking through that, talk about where that money is invested. And it's really essential to do some, like heavy inoculation and have really good information about how that information, or how we talk about where that money is invested. Because when you're talking to workers, you want to be able to show them your money, not just in general pension fund money or pension fund money but your money went into buying this particular company, not just, oh, it's with this asset manager. People don't even know what that means or whatever else, but saying, and we have those examples. So let's get them, right? And let's show it to people, right? One example of that is a company called RealPage, right? It's a software company that has developed an algorithm for what we call corporate landlords, the landlords I was talking about in my introduction that do some of the worst stuff, right? They're not necessarily slumlords, but they are absolutely the ones doing the corporate capture. And they work with RealPage. And RealPage's software enables them to create what they call a price cartel, right? So they're able to raise rents as much as possible because it enables them to share their rent information as well as other data with each other so that they can form a monopoly. Scary thing. So that company has been sued by the Department of Justice, by multiple attorneys general, by dozens, hundreds of tenants across the country. Over a couple dozen pension funds, the biggest ones in the entire country, put hundreds of millions of dollars. They've committed $5.5 billion to the specific funds that a private equity company used to buy RealPage in 2021. Right? So, but people don't know that. And being able to say that and explain that to them and not just then say, okay, you need to go get your money out of RealPage, which is what we've been doing a lot, right? But then it just goes into something else bad, right? The UC system and going to Blackstone or another landlord. If it's not a landlord, it's Steward Health and the stuff that's happening on the hospital side, right? But where can the money then go, right? We need to have different solutions that can still make some money for folks, because unfortunately the system is in a situation, as I described, where you need to generate some returns to be able to make sure that folks still get their retirement. And we have to acknowledge that, right? And we can't just do, this is not right now, unfortunately, nonprofit system. We're going to have to figure out long-term how to make sure pensions are funded, and we should be fighting for that too, and get workers to fight for that. But the first thing is getting them to show up and talk to the people that are supposedly making decisions on their behalf, say, these decisions don't make any sense. They're not actually, quote unquote, fiduciary duty, right? Saying that, like, we're going to get the highest return, and that's the only important thing. Meanwhile, I'm having to pay as a pensioner, right, as a member of the pension fund, more money in my rent. So, like, our team calls it eating your own seed corn, or assisted suicide, right? Economic suicide, essentially, right? You can't do that. And we need to be having members saying to folks directly. That makes the corporate capture that I talked about around pension funds and private equity and others that are doing that in the asset manager role so much more difficult, because it's so clear what the problem is and so clear that their solution doesn't actually make any sense. And then providing a different one, right? Investing in affordable housing, investing in solar, investing in the things that are actually going to benefit the community, and members themselves and their families, investing in healthcare that's going to help their grandma, their mother, themselves, their family, and at the same time generate some return so that they're able to retire, right? That's the project. And we're excited to be digging in with folks and their members to do that, to really paint the picture of what's happening, and have folks demand that their money is invested in the things that are gonna hopefully change the world. There's enough money to do it.
Well, let me follow up with that, and maybe and others can jump in as if you will. But like, so there's the public education piece that I get, and then there's the what are trustees are allowed to do piece, and the sort of the sometimes So are there examples you can talk about, or that anyone here can talk about, where a pension fund has reallocated its money in ways that are at least less bad, let's put it that way. Back in the day, there was something called economically targeted investments. I know there's, like, without getting too wonky about it, where are you seeing, like, opportunity?
There's a reason there's silence, right? The corporate capture part is very, very strong and making it very difficult to go into like, I'm describing something, it seems really clear, but when you go into this space, folks have very, very deeply, like, entered the psyche of all the folks that are involved in pensions, to the degree that it creates all of these structural and legal barriers to do what you talked about, Steve. We are in the process of putting together a report that talks about some examples. Unfortunately, a lot of them are international. I mean, not unfortunately, but it makes it harder, right, to bring them into our space, because people act like, oh, because it's happening in a different country, it can't apply here.
Well, share one, just even if it is international. Yeah.
Yeah. I mean, I think it's hard to get to scale, but the stuff that's happening with HIT, right? With looking at trying to build the Housing Investment Trust, right? Trying to build residential housing that it has workers paid as much as they should be paid, that it's thinking about it being affordable as well. There are definitely barriers, but those to getting that to scale. But that is an example in a place. There are multiple funds across the country. I believe it's in the UK, and I can look it up. That have put together a particular fund. So they're essentially serving as their own asset manager, right? Instead of going out and hiring one of these companies, they put together their own fund and go out and invest in a lot of it that we're looking into is housing because it's such a crisis right now. I feel like that's a big opportunity. But to look at investing in housing, unfortunately, it's been on a smaller scale compared to the problem. And we really want to see places where that would happen on a larger scale. But what we've talked a lot about and we'll continue to talk about is what we're terming a public asset manager, right? Which is either the pension fund itself or working with a public entity that can actually be held accountable by both workers and a community, putting together a fund and working with nonprofits and others if need be to step in and help them look for places where they can invest their money, right? And there's no reason that you can't do that instead of hiring folks, which is essentially what you're doing by paying them fees and everything else, whose primary goal is to make themselves money, really, rather than caring about what's happening with the pension fund money itself.
Great, thanks. Anyone else want to jump in on this?
In a slightly, if I
go for it.
I'm gonna come at it from my own particular position doing cooperative development and organizing. And one of the things why this interests me so much and how we've been trying to go about making an impact in this world is fundamentally by pushing for broad union cooperative alliances and initiatives. And one of the particular angles by which we've always kind of pursued that is cooperation. Jackson is really trying to convince, in particular, many of the trade unions about controlling their investments and controlling their pensions and redirecting that towards cooperative development so that we won't have to face certain kind of standard market-oriented return rates if structured in a particular way by drawing upon those resources. And this could be a potential way by which unions kind of increase their density in membership, but also their particular leverage points within sectors of the economy for more bargaining power, just at a basic level. But a critical piece of this has always been centered on, in order to tackle that, we're going to have to do some major, get them and the broader social forces in various communities to tackle this pension piece, because they make, if you look at like public workers, employees, and things of that nature, they make up a huge amount of the endowments that folks have in a lot of these states, but we don't control it. So we're going to have to first get ourselves organized in such a way that people see the strategic value of folks who are placed in this relationship, and then make the democratic push to seize those resources back and put them back in our democratic control. So for me, the opportunity is an aspiration, and one I think is increasing, because there are a lot of instances where these two, which if you look at it, I would argue, co-ops and trade unions as they exist in the United States, they're really historically, two sides of the same coin, but that kind of got disconnected and disjointed by how unions were formally kind of recognized in this country, and then segmented in such a way where they can't act in solidarity or they can't engage in political coordination or activities, at least in a concerted form, which then blocked and removed them from doing certain types of organizing outside of maybe certain kind of mutual aid benefits for their members. But we want to circumvent that and say, no, we need to be working together in concert, and we need to be, reinvesting in our own communities, and not just relying upon, the corporations to provide jobs, but for us to start thinking about how do we actually meet the needs of our own communities that we know right now, capital has no particular need in investing in, and increasingly, nor do our states. So how do we put that control back in our hands? And then how do we finance it? the pension piece is a critical way that we could strike a way to find it without having to be dependent upon going to a bank for terms that are not favorable to us in our organizing orientation.
Great. I think, Hannah, did you want to weigh in on this at all? No? Okay. I'm going to pass the baton to Arlene and then come back to Kali. But Arlene, I wanted to ask about, how can communities, I know this is something Good Jobs First does a lot of, but how can communities organize effectively to sort of break down that system of corporate subsidies that you guys write so much about?
Yeah, I think one nice thing about working in the area of subsidies is you have a lot of bipartisan efforts to rein in these subsidies. So there's a lot of libertarian, there's right, there's left. I mean, we dislike them for different reasons, but there is a multi-coalition effort, for example, to ban the use of non-disclosure agreements called Ban Secret Deals, NDAs. That's a lot of different organizations from different political sides working on this issue. So it is something that's appealing to all groups because, well, for a lot of reasons, but it starts with a lack of transparency. When I was a journalist for many years before I got into this space, and I was pretty outraged when I got here and I saw I can't even find out the company name or the amount of the subsidy. Two of the most basic things that you would imagine that you'd be able to access as a member of the public who's giving your money away to this company. In a lot of places, you can't even get that basic information. So there's been a lot of efforts made around transparency and a lot of transparency gains. I think when Good Jobs first started, it started rating the states on their transparency practices. A couple dozen might have had some information online about incentives, and now it's about 48 states. 49 states, actually. Georgia's the outlier. They don't put anything basically online about these subsidy deals. So transparency is a big one. And of course, we work with a lot of communities that are trying to get these community benefits agreements. So I think one thing that we've learned is that these local officials don't realize how much power they have to put strings on these deals. And I think part of that is that these companies come in, they're well dressed, they're well spoken, they're powerful, they're rich. They come in with a lot of sway in these communities who get excited to be next to an Amazon. I sat in on a lot of city council meetings. They're making $600 a month as a city council member. They want to do good for their community, and they think they're doing good for their community by bringing Amazon in, not realizing that Amazon is destroying their small businesses, uh, injuring their workers. Amazon's workers are injured terribly, so they're hurting their workforce. But I think they do it under like with good intentions. So adding strings to these deals, to these legally binding community benefits agreements, so that workers are full-time. They're not these contract workers. They're full-time. They have benefits, that they are paid well, living wages, prevailing wages, um, and that there's affordable housing set aside. There was a great uh, effort in Kansas City recently. The billionaire owners wanted to get some money for their stadium, and the voters voted against that subsidy deal. And part of what happened during the breakdown was negotiating these community benefit agreements. All the major grassroots groups were there, and the teams refused to set aside any meaningful money for affordable housing. So the groups walked. So the CBA, the community benefits agreement that was finally inked, was between the team and the city, like mayor. Community groups had already walked, so that's not really a true CBA. But we have seen areas where those are very effective in getting good jobs brought to a community. I mean, most of the time these incentives are unnecessary, but if they're going to be used, add a lot of strings to them. And we also see a lot of power organizing at the local level because a lot of these subsidies are given out locally, and they have a lot of power to rein in the size of these subsidies. Like in Philadelphia, they were giving away these massive residential property tax breaks, 100% for 10 years. These luxury developers didn't have to pay taxes for 10 years. And then the council member there really led that fight to reduce that tax break. So over a year, it gradually decreases per year. Would it have been nice to get rid of it altogether? Yeah, but those were some pretty big gains and pretty substantial dollars going back to all the services, all the public services that that money would otherwise go to. So I think there's been a lot of successes by groups who take the information and really demand better of their local officials. And at the city council level, it can be sometimes a little bit easier to get some action.
Great, thanks. Kali, I wanted to ask you, and then I'm going to go to the audience after that, but I wanted to ask you about, how do you actually go about building a solidarity economy on the ground? I mean, you've been at it for a, a minute, and so I thought you might have some thoughts on that.
Plenty of thoughts on it. The first thing, and I think the primary thing, is building solid relationships, right? And there are a number of different ways that you can do that. But the first thing is organizing yourself, and even if it's a small group, organizing yourself in a way that you can first try to meet some of your own immediate needs through a collective democratic process, and then ascertain what are some of the broader issues and needs that are not being fulfilled in your community, that you can kind of occupy through collective agency and activity. But I think the challenge is to not think about it being in a kind of a stopgap measure. I think oftentimes that's where kind of the solidarity economy and cooperatives kind of get pigeonholed, if you would, is just kind of occupying little niches where, the market or the state is not providing a particular resource. And while I think that's often a place to start, that's not ultimately, I would argue, where we want to end. Because you're only going to be able to meet a limited set of needs, kind of following that niche strategy. And this is why a broader set of outreach, once you're able to kind of pull yourself and some collective resources together, in with other social sectors, in the social justice movement, in the labor movement, towards a kind of coherent vision of how do we meet the needs in our overall community, and then what are the resources that exist that we can kind of tap into or we have to create, becomes another set of questions you then have to address. And then what is the enabling and atmosphere? And this is where you ultimately have to kind of, like, particularly on the local and state level, start to figure out how do you move policy, right? That then creates space for a broad kind of democratic movement from below to be able to actually build co-ops in such a way that you won't run into like a number of limiting encumbrances that we confront in Mississippi, wherein by statute, Mississippi really only allows either agricultural enterprises or utilities or credit unions to formally be co-ops. So that limits a lot of what we can do in terms of setting up various businesses to kind of play a particular role, and it's something we're going to constantly have to fight. Now, there are ways around it. So, like, our particular way around it is that we register our co-ops as LLCs that have internal operating agreements. So we don't let the limitations confront us in no form or fashion. And I saw somebody was like, how do we pull off, like Black and Latino culture as a way to kind of organize and to do this work effectively. I think in particular Black and Latino and indigenous, kind of working class and poor communities, we got to rely on the secret sauce of trying to find ways out of no way, which we are expert in a lot of our communities, and be creative about how we pull our resources. And the first thing that we have to consider as our resources is our time and our energy. And how do we govern that effectively? Because that's the piece that we often find, at least in our work, that's probably the most inexhaustible thing that we have, which is why it goes back to the first part around why the relationship building is so important. Because we have to inspire our folks at the outset when we don't have, thousands or millions of dollars to just, start new businesses. We have to rely upon each other and a lot of volunteer labor to really pull this off. And so that's where the last point about a vision of where you want to go is very, very important, I think, towards building a solidarity economy, in your local area from scratch.
Great, thanks. So I want to move to audience questions. Thank you for everyone who's on the call who's provided questions. Try to get to several of them. One, there's actually, I think, a couple, it was in the chat too, but there were questions about philanthropic endowments, which I haven't looked at the most recent figures, but I would say that's like 1.4, 1.5 trillion. So, not quite as much as in public pension funds, but quite a bit. And often heavily invested in hedge funds and private equity. So are there opportunities to push philanthropic endowments or donor advised funds out of the kind of extractive investments that they are often in today into the kind of investments that you're advocating? Kind of thinking, Sarah, you take the lead on this, but whoever wants to jump in can jump in.
Hannah, it looked like I was just going to I've talked a lot, Hannah or others a chance if they wanted to jump in. Happy to follow.
I can say something quickly. I think there's obviously some kind of lower hanging fruit around philanthropic organizations of narrative change, which is to say, making it kind of reputationally risky to invest in some of those things. But and that's possible, and that's important work. We do it at the Debt Collective. A lot of us probably do that kind of work, but it's not the kind of structural change that all of us are aiming for. And so we've talked quite a bit about housing, so I'm going to give the kind of what I think is more of the horizon in housing. If and when we, by which I mean debtors unions, tenants unions, labor unions, worker cooperatives, can make landlording unprofitable, folks seeking profit will no longer invest there, right? So as we build wall-to-wall countervailing power of tenants to take housing, and folks are talking a lot about affordable housing, agreed. It's important to think about affordable housing. We talked about Airbnb already. There is so much housing out there, right? We are thinking about landlords that have 80,000 units, 90,000 units, 100,000 units who are they are private equity, right? They're not even really landlords. They are real estate investment trusts. They are investment vehicles, right? That strata of landlording, just by scale alone, if we can build, I think of debtors unions and tenants unions very similarly. They have leverage in a very similar way. If we can build portfolio scale tenants unions that can expropriate and socialize that housing, this is long term, right? Then philanthropies will not have the opportunity or want to invest in it because it will no longer be profitable. Housing, medical care, education have to be decommodified, right? And if we can successfully decommodify them, then we get ourselves out of some of the medium-term problems that pension funds have, which is that they have to raise enough money for their workers to survive retirement in a horrible speculative capitalist economy. That's a horrible, right? Rather than investing in the kinds of regenerative, extraordinary things that Kali and Cooperation Jackson or others are doing. So the question is, how do we build the power to make that transition in as much time as we have given, climate crisis? And I think that, kind of militant, organized, countervailing power where we have leverage in our pensions, in our labor, in our debt, that to me is the kind of, I know it's not the answer the philanthropic advisors on here are looking for. So I think the answer that they're looking for is not looking for, but the answer that's possible now in the short term is reputational risk. And we can do a lot to make these kinds of investments more reputationally risky. But I think we really need to keep our eyes on the prize in terms of decommodifying these things and therefore making them unprofitable. And so folks who want to make a profit or still need to make a profit aren't there anymore.
Great, Hannah. That's fabulous. So another question.
Steve, can I just chime in?
Go ahead.
I'll just quickly add too that this goes back to reforming the tax code and getting companies to pay more, but also things like donor advised funds. I saw something in the chat there about those. It just seems like every day there's a new way to shield your money from taxes and just holding it in spaces to sort of continue this generational wealth. So when we think about reforming the tax code, we also need to think about those spaces that philanthropy holds their money and stop making it so enticing and stop creating new places for them to store their money, because that money just sits in DAFs and isn't actually invested, just like it's sitting in those other nonprofit assets.
Great, thanks, Arlene. Let's see. So another audience question was about Well, I'll try to read this and we'll see if this works. But it's the distinction between corporate capture and elite capture, or is there a distinction? So is corporate capture related to elite capture? For us in the nonprofit space, you find that when a new project comes into an area, elite politicians and wealthy folks take advantage and use project resources to serve their interests. That's how this person understands in their work. What do you see is it basically the same phenomena, or is there like nuances that folks should pay attention to?
I'll just chime in.
Acknowledge it.
I'll,
Go for
I'll,
it. Yeah.
I'll just kind of talk about how it works in economic development. And that when I read that question, it made me think of how companies a lot of times will locate in places where they know they're not going to find a lot of resistance because workers are doing other things. We saw that Amazon tends to locate a lot of their facilities in Black and brown communities because they aren't going to get the same resistance that they will in white or wealthier communities. So a lot of the site locate and the dirty industries tend to always go to poor communities. We see this in Louisiana and Texas. They purposely locate in these low income communities. So when I think about the public not participating in the process, that's definitely by design because they put these dirty industries in areas where there's not going to be a lot of resistance, and then they're heavily subsidized.
Great. Thanks. Let's see. Another question about pensions. So I'm going to tweak this a little bit, but the question was, can pension funds meet their fiduciary growth and payout targets by investing in non-extractive investments exclusively? And then, another way would be maybe they can do it partially, how does that actually work in terms of the numbers and return on investment? And, part of this is, of course, building up solidarity economy alternatives and decommodification that Anna was talking about. But, what at the present time, how much better can things be done? And maybe what's the longer term potential as well?
I mean, I think the first response to that for me is it's a false dichotomy to say that the way it's working now is working, that it's working for people, that it's like actually generating enough money. It's not, right? And that's what they want us to think. That's part of corporate capture here, right? It's like we just need to keep investing in the things that are extractive, and that's working. And by working, it means that they're getting a ton of money. We may or may not actually be fully funding those pensions anyways to begin with, because there's a lot of ways that they're manipulating those numbers to make it look like even if it's fully funded. In a lot of cases it's not, right? And that's a longer term question. But I think like that's the first thing is accepting those assumptions is really problematic. And it's also in that extractive way undermining and making it so that people are more reliant on the retire money moving forward and needing more and more and pushing for more and more commitments to that retirement money because of the situation that those extractive investments are creating. So it's a cycle of that we need to get out of to begin with so that we can actually, instead of just trying to do this math where it's like, well, this is what they're saying we need, and this is how much we have, and we have to get there. Like, I'm just going to refuse to accept that reality to begin with. But it's also a reality that when we go and talk to pension folks, they are dealing with, and if we don't at least acknowledge that that's how they're thinking about it and having conversations, and that's what workers and members are going to confront, that's it's going to be a problem for doing the work immediately moving forward, right? And so I think part of our approach to it is saying that there are examples. I put the one in the UK that I referenced earlier in here, right, where people and having not just small pilots, but larger scale real experiments to show that it can work, right? And be able to like bring people in a room and tinker with like what is the percentage rate at which things need to create a return so that we can actually be successful. Because a lot of times when they're promising a particular return, that happens, but a lot of times it doesn't, right? And so what is actually the even out rate, right? And this is getting a little into the weeds. And by rate, I'm meaning like the return rate, right? The percentage of the amount of money that's being made off of the investment. And what we think is it's closer to like an 8 to 10, maybe 6 to 8% range rather than this like 15 to 20% range that you could actually hit where you could have investments in affordable housing and other things like that. There's still going to be some trade-offs you're going to have to make. It's not like we're going to immediately be able to put a ton of pension fund money into social housing, right? We can do potentially some of that, but some of it's also going to have to go into. But the types of really extractive things, we absolutely don't need to be putting it into, and having clear standards that are actually enforced. And the way to do that is not just to put principles in place in a system that isn't functioning, but to change the way the system is operating so that it actually can be held accountable and has different priorities to begin with, right? And if we can't do that, and we're going to stay in the system where it's like, this is the only priority and we're going to ignore the rest of it, then no, it's not possible, right? So the first step is really changing that mindset.
Yeah, thanks for bringing that up. It reminds me, we just ran an article not that long ago on, it's an interview with Cliff Rosenthal and Michael McRae on credit unions. And some folks may know that the U.S. Central Credit Union went bankrupt. This is a cooperatively owned central bank. It's sort of a co-op of co-ops, right? Went bankrupt in the Great Recession because they invested in subprime investments, right? So, which begs the question, what were they doing putting the money there in the first place? So a lot of these extractive investments actually fail pretty spectacularly. So I appreciate that point. I'll just say that. Let's see. A question for you, Kali. I'm not sure. The question is, does your state have a right to repair law? I will confess, I don't know exactly what these are. My state just passed one, and we are looking for ways to capitalize on the new right for our communities to continue building power for consumers.
If I'm understanding that, because I've heard that used a couple of different terms, but the general sense that I know that is like, by way of example, folks who are not aware, the proprietorship kind of issues in the way that they're even built. You cannot repair an Apple computer by yourself. You have to take it into an Apple shop, and they send it off someplace, and you don't ever see behind the scenes work. And if you take it apart yourself, even if you have the skill and try to put it back together, there are limits on like resale and things like that you can do, right? There's other, I just kind of give a practical example. There's a lot of stuff that limit like these kind of right to repair. Mississippi does not have a law like that. We we exist in one of the most restrictive legal environments that you can kind of think of. Unless you're an oil company, then or something like that, then anything you want to do, pollute the entire state, that's totally permissible. But us trying to say capture rainwater, given the nature of the water crisis that's within our city. You can do things that to a slight degree where you can do it and employ it as gray water, meaning you can't drink it. For those who aren't aware, you might be able to use some of it filtered for agricultural purposes or things of that nature. But in an environment like ours, which is typically very what's the word I'm looking, we have a great amount of water that you can either dig for, tremendous aquifers within the state. Mississippi's 30 miles to our west, and then there's the average annual rainfall is excellent compared to most places in the country. So there's no shortage of water, but the limitations that are placed upon like working class communities to access these resources and to use them in ways that they might deem to their own ability to control kind of autonomously, either on the community level or the household level, those are seriously restricted so that everybody kind of remains dependent upon either the main utility or the main grid, despite its collapse or despite, them refusing to go solar or only relying upon coal or, even though these things have been proven time and time again to not be effective or efficient. The nature, unfortunately, of the kind of balance of power, if you would, in our state means that it's a right to work state, it's a Taft-Hartley regime state, and that just means the right to exploit and oppress pretty much at will. And with the Republican super majority that we have, they're becoming even more restrictive on what we can and cannot do, including developing a lot of preventative laws, right? Trying to prevent things ahead of time, so they're doing it already around some of the things that we've been proposing around, climate mitigation and climate adaptation, just outright blocking it ahead of time. Or, one of the most egregious ones was blocking municipalities from setting their own wage rates. And this was a direct way to fight the campaign for, a living wage, the fight for 15 in particular. So that's the environment that we live in Mississippi. But, if time permitted, I could tell you, again, like everything, there are ways that you just have to figure out how to work around this stuff to not get yourself in trouble, but to be creative and flexible. And that's constantly what we have to employ.
Yeah, great. Thanks, Cully. So there's this, I don't know, this seems like a Hannah question to me, but it's pretty simple, but I think you can take it in a lot of different directions. Isn't much of debt usury, as in not really lent and used? But, you can think a little bit, like you talked about the debt fair state in the article. So, talk about like how we conceive and misconceive of debt.
Yeah, I mean, so there are, as you say, Steve, there are lots of ways to answer this question. So often usury is understood as kind of unjust debts, right? If a debt is usurious, so payday lending is kind of a classic example of usury, right? Like precisely because there is not accessible free financial infrastructure, especially for low income people, for undocumented people, right? So then you have this corporate capture pinging up on neighborhood corners where you can cash your paycheck or you can get a payday loan, but you pay like 325% interest or something crazy. So one of the things, actually, one of our other co-founders, Andrew Ross, a long time ago, wrote a great book called Creditocracy and the Case for Debt Refusal. He does quite a bit in that book to distinguish between just and unjust debts. And because one of the things that we want to think about is the ability to have access to resources now that you may need to return down the road, right? Which is what credit and debt essentially refers to, is not in and of itself bad, right? So the question is, which debts are usurious? Which debts are socially destructive, ecologically destructive? And what forms of resourcing can be socially productive, can be ecologically productive, and most of all, can be reparative, which is to say, acknowledging that the way that debt has worked in the past has disproportionately harmed Black communities, Indigenous communities, migrant communities, Latinx communities in this country in particular. We were going to talk a little bit about racial capitalism, so I'll bring that into the frame now, right? So how can resources be distributed in a way that repairs, right, a different sense of repair, that kind of intergenerational theft of wealth, of land, of labor? And I think that we can think about credit and debt pardon me, in socially productive versus usurious ways. But the other question about debt that this question brings up, like, aren't some kind of debts essentially abstract, like they don't even exist, right? So isn't there some kind of way that there are certain debts that we can just ignore collectively? And the debt collective would actually argue, yes, there are, but we have to do it collectively. One of the things that's interesting, I'll just give student debt as an example, and I'll end here. I would say that student debt, especially for a nominally public education, is usurious on its face. I believe that there should be a public option in all education from kindergarten through college and even postgraduate, right? So to go into debt for something that should be public, I would say is usurious by definition. Now, something like 97, 98% of all student debt in this country, which remember is nearly $2 trillion, is owed to the federal government. It's not owed to any corporation. You might hear about Mohila. You might have heard about Sallie Mae in the past. These are loan servicers. Many of them are nonprofit entities or private public entities. It is owed to the federal government of the United States. There was also a question about debt-free money in the chat. The federal government of the United States has a very powerful bank, right, known as the Federal Reserve. The Federal Reserve spends a lot of money on sending weapons abroad, right? The Federal Reserve, there's broad bipartisan support for that defense industry or defense budget every year. And nobody says, oh, your taxes are going to go up. We don't have enough money. But when people say we should fully fund public education in this country, we should fully fund medical care for all, we should fully fund, they say, oh, wait, oh, we don't have enough money for that. That would call, we would have to raise everybody's taxes, right? The federal government, and in fact, Joe Biden, without congressional approval, tomorrow, using what's called the power of compromise and settlement, could say student debt should go away. We don't need it. It disproportionately burdens Black women. The fastest growing demographic of debtors is people over 50 years old. Like, let's get rid of this. This is terrible. It would not have to go through Congress. He has the power. He could do it tomorrow. That suggests, right, that when we organize as debtors, we relearn what debt is and how we can use our power to get rid of it. We've used compromise and settlement at the Debt Collective to get rid of hundreds of millions of dollars worth of debt, even under the Trump regime, right? Which is what happens when you build power. It doesn't necessarily matter. So to wrap it, I would say, yes, there is usurious debt in terms of debts that are unjust and perhaps debts that are just, by which I mean socially and ecologically productive, and it's important to differentiate between those. Reparations is a debt owed, a real debt owed that has to be paid, for example, right? And there are debts that are usurious in the sense that they, when we look further into their empirics, they don't exist in the way that we think they do. And if we can build that political education and that collective power to get them abolished and change the system that caused them in the first place, we see we have a lot of power and creativity in our hands that we wouldn't have known about otherwise.
Great, thanks. That's fascinating, Hannah. I really appreciate that. Let's see. I want to see if I'll ask one more audience question, which is a mobilization question, language question. How do you get communities to galvanize around each other to advocate and obtain solutions? Is there language that is helpful? That to actually advance this work, and anybody can jump into that.
I would say yes and no. And why do I say that? What in our experience and in my own just personal experience, the quality of the relationship enables the receptivity of the audience. And in building a relationship, I learn, what language to use. So it's not like I come up with some magical formula. It's built upon, I know you and I know how to talk to you. I've learned over time how to talk to you, engage with you. So as we say, that we've been taught, given our positionality as Black people in a white-dominated society, you got to learn how to do some code switching. And that doesn't mean, the often recognizing a balance of power, but that is a real factor that you always got to bring in. But oftentimes what I found in my work in terms of organizing, there's one basic level of, it's got nothing to do with education. Oftentimes it just has to do with interests, to be clear. First, start with a level of conversation of, kind of where we share in common or how we see things, that we may be directly experiencing together. Start with there. And then I think it's my job, as a conscious kind of organizer, to then try to bring in more information and analysis and perspective and questions that just kind of not just leave the conversation at a basic level, but like, what about this? And what if we do that? And what do you think about this? And at that point, you can kind of interject more ideas, more language, more frameworks, things that people may not be familiar with. But, it's a process where we're educating each other constantly and consistently, and we can kind of consistently raise the bar. But I don't think there are like magic words. Now, there are things that people have been educated, against or have fears against. You do have to be mindful about that. And I think even with that, it's like, how do you do, I can describe, from me, people in my context, they know I'm an unabashed socialist. I don't go around like preaching that. I don't need to, as opposed to, hey, I want this, and I want this, for myself, for my children, for you, your children, X, Y, and Z. This is how we go about doing that. Never at one time do I necessarily have to use that particular word, but I'm describing the outcome of what collective action and social ownership could look like in such a way that people are like, oh, I can relate to that. That makes sense to me. So I think it's, again, premise on how we build our relationships in terms of doing our work. I'm also one who believes we need to speak precisely, like when we're naming things and writing things up, we need to speak precisely and speak with clarity. But often tell people, don't necessarily, when you come to me, don't read what I write, but just talk to me, then we'll figure out how to communicate from there, about what we share in common and maybe where we differ, and how do we work on the similarities and the differences.
Great, thanks, Cully. I thought I'd give Hannah, Arlene, Sarah, if you guys like 15, 20 seconds each of like any closing comments.
I mean, I'll just bring in what Hannah has been saying, as well as others, that all of this feeling like so connected to each other really, as a close, strikes me as an opportunity for all of our work to see how we can bring that together. And I think in the way that Kali was talking about, it's about how we talk to people about these problems and them being interconnected, in our organizing in a way that makes them feel like there's something that they can do about it. There's an immediate next step, and getting out there and making that happen. And I feel like very excited about that possibility on all of our different areas and how interconnected they are in addressing them.
Great. Arlene?
Oh, that felt like a good way to end, but I'll just end there.
Hannah, anything last words from you?
I guess I want to lift up what each of us has said in a different way, but Kali just said it in response to this question. The main problem that stands between us and the multiple places we want to go, I think short, medium, and long term, is organizing. And like Kali said, there is no magic language. It's, if folks out there like what you're learning on here, see if there's an organization that is base building that you can get involved in, where you can flex your power. And like, organizing with other people is not glamorous. Frankly, it's not even as fun as a webinar, right? You're not like tossing around cool ideas. You're doing that hard work that Kali was describing. You're talking with people you disagree with. You're taking it's like endless freedom is an endless meeting, right? It's like endless meeting, endless Google Docs. I mean, it's such painstaking work, but that's what is required to build power. And we have to build power. And it's not too late, as so many people say. And there's actually a lot of power around that's been built already. And so I think for folks who are like, what's the language, or what's the next step? Or I think just really shifting all of our gazes to the hard work of organizing and power building is where we need to go.
Great. Well, I think that is a good place to end. And I want to thank all of the panelists, Kali Akuno, Hannah Appel, Sarah Michael Bust, and Arlene Martinez. Thanks to all of you for your excellent questions on the webinar. And, I saw there was a request to get, we will do some kind of summary of some of the links in the chat and so forth and send that out as well. So thanks for that note. And we do have an upcoming webinar on October 16th. So that's a month from now. It's with Shelterforce, and we're looking at cooperatives as a solution to housing, focusing on residents of mobile home communities coming together to own the land underneath their homes. So I hope you join us for that. The link was in the webinar earlier, and there is an evaluation after survey. It's literally 5 questions. Please do fill it out, and hope to see you in a month. And thanks again to our panelists.